Are you losing money trading options? Well, you're not alone because most people make one big mistake when they first get into options. And that big mistake is chasing big gains without a solid strategy or a long-term strategy. And it's basically just gambling, and except the odds aren't in your favor. So today it is September 4th. My name is Looney. I'm not a financial advisor. I just share my opinions and I provide my results, and you guys can join along my journey. So furthermore, with my point, the gambling side of option trading, because a lot of people think options are risky, and they can be risky, especially when you buy options. So that's what the big mistake of beginner traders do, and that's buying options. So with buying options, you can make a lot of money, but with buying options, there's a lot of risk and reward. So of course you can make a lot of reward, but the risk often outweigh the reward on a long-term basis. So let's get into this. So let's take a look at American Airlines. We'll choose that one. Trade options go out about a couple weeks, and we're going to click buy. And let's do buy call. Buy call is a lot more safer, or I'd say better than buying puts. And I'm saying that because buying calls can be used with other strategies and can be a long-term strategy. So buying calls are good for long-term, but let's just look at a short-term one. As you guys can see, as you go down, chance of profit goes up, but the price of it goes up. And these 100% ones aren't truly accurate. One, because it's after hours and the volume's low, so it's not actually truly what it's going to be with the break even and the bid ask. So we're going to look at one above that, but these are going to be in the money below the line, and above is out of the money for calls, for call size only. Puts are opposite. Below is out of the money, and above is in the money. So you're going to want to do it in the money buying. And let's do this 10 call. So you click 10 call, buy, and you need the stock to go up to 1091, which is doable in a few weeks. It can be done, but the market's very efficient. And also, this is after hours, so it's slightly different. It's probably going to look a lot different when we actually open up on the market hours. And although you can win $91 you can win unlimited, so it looks very good, you can also lose $91. And not only that, there's a chance that you can't get that money back once you go below this strike price. And this strike price is very close to what the stock is trading at, 1066. It is very likely, or I don't want to say likely, it's very possible that American Airlines can trade below $10 and you lose that $91 and you don't get it back. But you can still make money if it's above that $10 mark and you want to do another trade after this. Obviously, you'll lose money here, but you can do another strategy after. So you want to use buying. You can use buying, but I would use buying with other strategies, and it's not really a good long-term strategy. And even here, you actually don't get to own the shares. So the risk is, it says 91, but you don't get that money back, and profit's unlimited. So if the stock obviously soars to infinity, you get infinity money. But that is unlikely, especially with the market being downward. So the market knows this. And especially when you buy puts. Puts are very similar with the risk versus reward. And we're going to go one that is in the money. So let's go to this $12.5 put. It's most expensive. It's around $200. And if the stock goes upwards, you lose that money and you don't get it back. And you can make money if it falls, which you can make money. You can make money buying puts. And people do it all the time, but it's not a long-term strategy that you can truly relax and get rid of the management side. Because when you buy, you do plan to close early or hold, but most people like to close early because they don't want to risk losing it all. So instead, I'm going to show you how to start winning trades and the most consistent. And the most consistent is selling. So if you click sell and put, and you want to do one that is out of the money or below, and we're only going to go over puts because this, I'm assuming that if you're looking to buy options, you obviously don't own the shares. And if you're looking to get into getting the shares, selling puts is a great way. So you're going to want to choose one that is 30 delta. This $10 one is perfect. And it says max loss is 980. So of course, that looks scary to most, but really that's if the stock goes to zero. And if the stock goes to zero, there is a big chance that catastrophic events happened. Basically, my point is it's not going to go to zero, or it's very unlikely. It can go to like 9 or 950. If it goes to 950, you lose $27. But the great thing is you actually get to own the shares and keep running trades, doing the wheel strategy, covered calls, and you could run a lot of option plays when you sell puts. And when you sell puts, you can buy puts and you can do a put credit or a put debit. And that's more advanced. I'm not going to go over it in this video, but I did want to just do a quick video on how to win at option trading. So if you found this video entertaining, don't forget to like, subscribe, share, join my Discord, follow me on Twitter, and have a good one. Peace.